Hello dear traders, my name is Elizaveta Belugina. I'm the head of analytical department at FPS, and today we will discuss the outlook for Forex measured currency pairs for the remaining days of this week. I hope that you are in a good mood and ready to discuss the hot topics of Forex market, like the meeting of the oil exporting countries, which will take place tomorrow on Wednesday, and important statistical data releases from the United States. So let me turn on my presentation. Here it is. Our agenda for today is as usual, but we will make it a bit shorter because we have not much time today. So let's start with discussing how the Forex market is positioned, then talk a bit about the main fundamental factors which will affect the dynamics of the market, and when they will turn to the Forex charts and see what is going on there. And as for the market's positioning, we can see that the total US dollar long, or in other words, net bullish position of the large players is still great, according to CFTC, and as we know, it is Commodity Futures Trading Commission. We can see that during the last week, the data is available. There were some minor changes in how the market is positioned. For example, traders continued decreasing bullish position on Japanese yen. This confirms that the current move to the upside in the US dollar Japanese yen currency pair is happens on the basis of shift in positions of Forex traders, and this gives more credibility to this upside move in dollar yen. We also see that the bullish position for Australian dollar is decreasing. The currency is trying to recover, but the bullish position was very sizable, and during the week which ended on November 22nd, this large bullish position has been decreased. Also, we can see that the bearish position for the single currency, the euro, is still big, and the bearish position on British pound is decreasing. So British pound is in more favorable conditions than the European currency. This is the basic info we can use about Forex market positioning. Then we turn to the main currency, which takes part in most of the currency pairs we trade, the US dollar. And we can see that last week the US currency managed to strengthen versus the other currencies, but the gains of the greenback were smaller than in the 2 previous weeks. The US dollar index failed to overcome resistance at 102 mark. And this week, the US currency opened with a gap down, if we are speaking about the US dollar index, which tracks the dynamics of American currency versus 6 currencies of America's main trading partners. The bullish trade we saw after the US election has paused. The US currency tended to rise following Treasury yields, which went up on the expectations that Donald Trump's policies will increase the US inflation. However, now market players have reduced inflation expectations, fearing that the Organization of the Petroleum Exporting Countries fails to reach a production cut deal on Wednesday, and oil prices fall. So we now see that the expectations of lower oil prices tend to be negative for the US dollar in the current circumstances. Many analysts think that the US dollar rally was too strong and that now it will retrace much of its gains. Traders may even remember that Trump means uncertainty ahead for the American economy. The Federal Reserve's December rate hike is now fully priced in, and it can no longer be a substantial driver for the US dollar. And if we look at the US dollar index and do some technical analysis here, then decline below 100.50 mark will open the way down to 99 support. At the same time, I think that we shouldn't be too bearish on the greenback because US economic data on margin tends to be good, and the Federal Reserve's chairwoman Janet Yellen has confirmed last week that the central bank will tighten policy next month. So I think that the declines in the US dollar will be limited. If we look at the daily chart of the US dollar index, we can see that yesterday's candle had a very big lower shadow, and this should provide some support for the US dollar. We will be watching statistical data coming out of the US. Today, America will release the second estimate of the third quarter GDP reading and also consumer board confidence indicator. On Wednesday, we'll see ADP employment report and personal spending data. There will be unemployment claims and ISM manufacturing PMI on Tuesday. And of course, the highlight of the week, the event we are waiting for every month, the release of the US non-farm payrolls on Friday, will be also an important factor and will bring volatility to the US dollar trades, as to the US dollar index, as to the US dollar in euro dollar and other forex measures. All in all, the figures will likely show that American economy is in good shape. So I believe that buying the greenbacks on its pullbacks to the downside is a good strategy at this point in time. Now I'll turn on the charts and we'll discuss the outlooks, fundamental and technical, for the other major currencies, looking at the charts for us to have a direct reference to the quotes. We start with euro dollar, and as usually we look at the weekly chart. Here we can see that last week the euro managed to hover above 105 mark. This is actually a long-term minimum for the euro dollar. We can see that the last time the euro traded this low was at the end of 2015, in November 2015. A year has passed. All in all, it was a year of sideways trading for the single currency, and now the return of the euro to this year-long lows around 105 certainly provides some support. We see that it's very difficult for the bears to take out this level from their first attempt to get lower. All in all, there were 2 weeks of declines and rapid declines in the euro dollar, and now we have a kind of pause here. The bear is waiting for more information, for more drivers, which will come from the releases of statistical data, which are planned for this week. And if we are talking about the euro area, then we can see that comments from the European Central Bank's Governor Mario Draghi no longer make such a big impact on the single currency, as everyone knows that the European Central Bank is going to continue its loose monetary policy, but no new measures are awaited in the short-term period. So the main driver for this pair will come out from the United States. And US data will be the main thing we have to watch here. Let's now have a look at the daily chart. What we have from the weekly chart is that 105 is a strong support level for the currency pair. At the daily chart, here I have an indicator called pivot points multi-time frame. I have chosen the weekly period, so I have weekly pivot level. It is painted in light blue and is located at 105.88. As long as the euro is trading above this level, the outlook is bullish, while below 105.88, the pressure on the single currency will be negative, and the lower we go, the stronger will be this negative pressure. We also see support and resistance levels. Weekly levels are painted in red. These are resistance levels, and support levels are painted in blue. And we can see that a big obstacle for the euro on the upside is located around 106.60. This is the first weekly resistance level. If the single currency managed to get past this level, then our next target will be at 107.28, and the third weekly resistance level, which will likely cap the euro dollar this week, is at 108 mark. As for support, it is at 105.20 at last week's minimums, and the next level will be at 104.48, or we can take 104.50, and then it is 103.80. For now, we have a kind of range between this first weekly support and first weekly resistance. The range is between 105.20 and 106.60. If the US releases good data, then we will have the pair test with a 105.20, 105 area. But taking into account the fact that the Federal Reserve's December rate hike is already priced in, then I think that we should place our take profit targets on euro dollar shorts somewhere around 105. It is kind of difficult to count on bigger moves here on the downside, as the statistical data for the US will be important. Still, we will have won't have great impact on this December rate hike prospect by the Federal Reserve. So everything is probably settled about the Fed and December, and this is why the US dollar has some potential to strengthen, but this potential is kind of limited. Also, if we look at yesterday's daily candle, we can see that the shadows of this candle are along both the upper shadow and the lower shadow, and this indicates that the market is in the situation of uncertainty, and traders for now are not ready to leave this current range where the euro dollar tends to find itself. As for the impact of OPEC meeting, of the meeting of the Organization of Petroleum Exporting Countries, we have already spoken about it a bit, and I have told you that the expectations of lower oil prices, which will be our reality if oil producers won't be able to reach an agreement. These expectations have negative impact on the US inflation expectations, and consequently on the US dollar in the short term. So some positive pressure may come out from this meeting for the euro dollar. I think that it will be very difficult for the oil exporting countries to reach an agreement, because the positions of different sides in this deal are very different, and we see that although such countries as Iran want to increase production, countries like Saudi Arabia want to have high production as well. Everyone wants to produce more, and in my opinion, the exporters are not really ready to come up with an agreement that will cut their production and decide who will cut more than the others. It's a very sensitive and difficult decision to make at this point. So there may be some negative pressure on the US dollar from this side. If we are talking about British pound US dollar pair, then we can see that the British currency is doing much better than the single currency. We can, looking at the weekly chart, we can see that there is a lower high, a high low in GBP USD formed last week. However, British pound still needs to overcome resistance level around 1.2660. This is high of November. In order to confirm that this is not an interim top, that the pound is ready to correct higher to higher levels around 1.29. For now, the situation is more like a consolidation here as well, as the market is waiting for new drivers. But still, more downside will materialize only if we are past support level located at 1.2350 mark. Also, we see some not very positive signals from the weekly stochastics, but probably it is better to look at the daily chart for more information. And the daily chart also gives us a clearer view of the fact that the British pound does have significant obstacles on its way to the upside. We have the bearish daily Ishimoku cloud here, which is putting a pressure on the bulls. We have the decline in moving averages, which show us that the downtrend is still in place. Resistance is located at 1.2550, 1.2540, and here at the daily chart we can see in greater detail that a possible head and shoulders pattern can be activated at GBP USD chart. At the daily chart, we can see in greater detail that there was a kind of top at the beginning of November, a top around 1.2556. And as long as the pair is trading below this level, a chance that we will get here a kind of head and shoulders pattern, which will send the pound below support at 1.2370, 1.2350, and to levels around 1.21. Such chance exists. So whether you are trading ranges on the 4-hour chart, here you can see that all moving averages, I have the 100 period moving average, 55 period moving average, and 200 period moving averages are horizontal. It means the lack of trend on the 4-hour chart, the lack of short-term trend. The strength of resistance levels I've mentioned at 1.2540 and around 1.2370, 1.2350. It says that either you are a range trader who trades this range, sells on the pair's approach to the resistance and buys on its approach to support area, or you are waiting for a breakout and the confirmation that the pair is trying to recover, or on the other hand that we have this resumption of negative trend. This higher low, which was formed last week, is certainly a positive thing, but if we look at the bigger picture, the overall negative trend is certainly stronger for the British pound. So in my opinion, short positions are less risky. So here we will watch the US data, and we will watch these support and resistance levels, because likely we see a good trade materializing here. The good US trading data should make British pound US dollar test lower levels. All in all, the British currency is supported by the expectations that Britain's exit from the European Union will take longer time than previously expected. And this is a kind of potential advantage for the British pound. Many analysts point out that after post-Brexit decline, the British currency is still undervalued and still has to conquer higher levels. But as conservative traders, I'd like to propose you to wait for the actual confirming of trends reversal. And I think if British pound really gains upward bullish momentum, there will be time to join this move to the upside. For now, more risks are to the downside. We have a very eventful week in the United States, and as a result, more risks are to the downside. We are more ready to open short positions on the break to the downside. As for the UK economic calendar, we will keep in focus the bank's stress test results. We had to assess the resilience of major UK banks to tail risk effects on Wednesday. And we will get the financial stability report from the Bank of England and on Wednesday as well. On Thursday, we will find out about the health of the UK and the US manufacturing industry. And British construction PMI will be available on Friday, as well as the volatile US non-farm payrolls data, which will surely make the pound leave its current consolidation range. By the end of the week, I think that we will see the pair make its decision and make a move to either of these directions. And yeah, we have had a look at every time frame, which is important in our weekly analysis. And I think that the picture should be more or less clear now. We move further. We move to US dollar Japanese yen currency pair. And remember how we talked about how the market is positioned, about CFTC data, and the fact that it really confirms that this move to the upside in dollar yen, the move is really, really impressive, that it has some fundamental and speculative reasoning behind it. We can see that there were several weeks, 3 weeks of big gains for dollar yen, and given the markets, the fact that the market is reducing demand for the Japanese yen, I think that another bullish week is quite unattainable scenario. We can see here the weekly pivot level indicator. The pair is currently above the weekly pivot mark at 112.44. As long as we are above this level, the outlook is bullish. And the first weekly resistance level is at the same level as the weekly 100 period moving average. It is 114.60 area, and this is the bullish target for the dollar yen for this week. Other resistance levels provided by the indicator include 116.07 and 118.25. This is something over the top for the greenback in my opinion, but 114.60 is a good level to aim. We see that after the initial decline this week, an attempt to test support close to 111 mark. The US dollar Japanese yen currency pair is once again above 112 mark, and this is a good sign. The weekly chart shows, of course, that dollar yen is overbought. Stochastic indicator is far inside the bullish territory, but we don't have a negative signal yet that we should reverse our bullish trades. No, for now the weekly chart is fine for the dollar yen. Also, MACD indicator is growing, so does the 20-week moving average. It is sloping to the upside. Let's now visit the daily chart for our further analysis. Here we do have some negative intersection of stochastics indicator, but the moving averages are very bullish. The 50-day moving average is getting higher. It went above 100-day moving average and is ready to cross 200-day moving average to the upside. We see that 107 and 108 provide good support for the dollar yen. As long as the pair is trading above these levels, then we can say that the market is favorable to the bulls, and all in all that bullish positions are more welcome than the bearish ones. And the current battle is taking place in the area of 111-112. Today the pair is trying to erase the decline we saw at the beginning of the week and to move higher. There was an opening gap to the downside, and the close of this gap will open the way to the resistance level I have mentioned, around 114.60. Here everything interesting in the fundamental picture is also about developments in the United States. It's also about the outcome of the meeting of the petroleum exporting countries. And basically, if we are looking at Japan, nothing new. Some data are released in this country, but really we don't have any significant expectations for the Bank of Japan policy, for the actions of Japanese policymakers, and as a result, the main driver is coming out of the US. There will be some industrial production figures from Japan, but once again, Japanese statistics can make only some minor changes in the rate of this pair, and even if you are an intraday trader, it won't affect your position really much. So this is dollar yen. I'm here a buyer. I still hold my bullish position, and I'm ready to fix profit at 114.60. The advance of dollar yen will probably slow down because it has been very rapid up to this point, but all in all, conditions for the pair remain favorable. And let's talk a bit about commodity currencies and have a look at Australian dollar US dollar currency pair. We start with the weekly chart, and here we can draw a line through the minimums of 2016, and we saw that Australian dollar has violated this line to the downside. Now the pair is trying to recover, but there are resistance levels which are limiting Australian dollar's ability to get higher. This week we have an obstacle in the form of 100-week moving average, which is located at 0.7477. Support is here as well. The Ishimoku cloud has become bullish, but it isn't really strong. But it managed to keep the pair above 0.7330, and there is also support of the 55 moving average just above 0.74. So here we will be looking at the dynamics of the market's risk sentiment. Also, there will be some data from Australia to take into account. The data from Australia includes such things as Australian private capital expenditure on Thursday, followed by a bunch of China's manufacturing data. And in the end of the week, we'll get Australian retail sales figures. And of course, at the end of the week, there will be US non-farm payrolls. Also, Australian construction data will be released on Wednesday. So we do have some important things for Australian currency in our economic calendar this week. Still, as we think that the US dollar has all chances to strengthen again this week, I think that we should be rather cautious with bullish positions for Australian dollar. The weekly middle Bollinger Band around 0.7560 is probably our resistance level, which will cap the pair this week. And at the daily chart, if we look at the weekly pivot level, we are currently at the bullish territory above 0.74 mark, but we have strong weekly resistance at 0.75 and the next resistance at 0.7560. 0.7560 is the potential place to think about short positions and to look for bearish signals for Australian dollar, US dollar currency pair. So let's make a conclusion now about what we have been talking about today. The currency market this week will be trading on several major fundamental factors: US statistical data, which includes US GDP on Tuesday, US labor market data on Wednesday and Friday, and also news from commodity market from the meeting of oil exporting countries on Wednesday are important. The press conference of oil exporters will be around 16 GMT plus 1 on Wednesday. It's 4 p.m. Vienna time. The oil exporters will meet in Vienna. So monitor the news feeds around this time on Wednesday. Also, I think that some statements from oil exporting countries may come in advance and a bit later, so pay attention during the whole trading day. Overall, we think that some profit taking and some weakening of the US dollar is temporary, so we will be looking for opportunities to buy the US dollar currency, and we expect US data to come out strong this week and provide some trade opportunities. If we are speaking about the euro dollar, the pair is between 106.60 on the upside and 105.20 on the downside. Good US data will make the single currency decline to 105 mark, but here we find a really strong support level. So here where I advise you to put take profits on euro dollar shorts. As for the British pound, it is also in the sideways range right now, and we have to watch 1.2550 on the upside for a break higher, or a decline below 1.2350 to open the way to 1.2230 and 1.4160. And dollar yen has a good bullish setup above 107. Some decline in pace of the US dollar's appreciation is likely, and the level to focus on the upside, is located at 114.60 mark. As for Australian dollar, it is trying to correct to the upside. It met some resistance at 0.75, and the level of 0.7550 is likely to cap Australian dollar this week. So at this point, we will be looking for a chance to open short position. This is the summary of what I wanted to share with you today. I hope that the information was valuable. And next time I plan to meet you on Monday and to give you an account of the next trading week. We'll have more trading days to discuss next time. I wish you good luck in your trading, and hope that all statistical data releases of this week will help you to earn money and will be in line with your trading strategy. This was Elizaveta Belugina, FBS. Good luck and see you next time. Goodbye.